Good evening, everyone. Delighted to be in this auspicious venue on such an auspicious day, the biggest fall in the market in about 2 years. All Basins. Well, we're a very small micro-cap company, but we've got big ambitions, and hopefully I can do this in a way where hopefully all you guys in this room and elsewhere overseas can make some money. Obligatory disclaimer. Of course, it's quite small, the print, there's a lot there. Basically, we're referring to every item in this document has some aspect covered by an expert report, which you can see on the website. So who is All Basins? Well, we floated the company in July 2006. The company morphed into an operator, one of only 18 operators in Western Australia in 2010. 2010, we also drilled our first exploration well. Happily, that's being a success, as you'll see today. And we currently operate 3 assets, and we have 6 assets in total, if you include the downstream capability. The operated assets are 100% ownership of the Serrano oil field, a known discovery, which is in the Carnarvon Basin. Excuse me, 100% of the rights to the Back Reef area in the Canning Basin, and we've got also operatorships, designated operatorships in CSG, USG, in a yet to be awarded permit, which I'll call the Derby Block, and also we've got the ability to get involved in an LNG feedstock arrangement with LNG, and we have non-operated assets, and these are also our crown jewels, I would argue, in Gippsland. I'm not going to spend too much time on this slide. We've got 300 million pieces of paper outstanding. If you include the options, 420 million bits of paper, roughly 430. Market cap last week, 9 million. Current share price, a little bit less than 3 cents. With no debt, about $250,000 in the bank as of the 30th of June. And we've got an experienced board, founding director, Kim McGrath, resources lawyer of well-known, Nigel Harvey, former head of commodities oil at Macquarie Bank, myself, both upstream and downstream experience, and also investment banking with JP Morgan, and a very experienced geologist, Jeff Geary, former Mobil, Exxon, and lately with MEO. Major shareholders, 7.5% LNG Limited, directors account for about 6%, top 20 about 40%. Well, that's us. Get into the main details now. Right, we formed this company purely as an explorer, and we're now moving into be a developer in active projects in a number of basins. The basins that we've actually been almost surgical in looking at have one common denominator. They're all mature basins, all well known in terms of geology, hydrocarbon plays, and we're looking at with new technology, new ideas, based on our ability, based also on the good team of consultants who assist us. And happily, I can say to you today, we have 4 projects, all company makers, all ready to go in a re-rating opportunity. I'm not going to go through this slide in any great detail. I'm just going to introduce some names to you. First of all, we have a Serrano oil field, and near-term actions on that are basically to achieve the renewal of the block for 5 years, and then look at a way of progressing the farm-out and or unitisation of its development. Back Reef area, which we also own 100% beneficial rights. We've defined the Back Reef oil pool. Today you will see new material that's just been released in this release this morning, and hopefully that'll excite you. Also USG, CSG, unconventional shale gas is the future of gas in North America. Every company from Exxon down to Hess, down to Chesapeake, BHP are investing heavily in USG. This is a technology play, and we have a very good address in the Canning, as you'll see. We've also de-risked that address with CSG, and also point out that as well. Also in Eastern Gippsland, as my previous speaker has mentioned, we're now in a carbon dioxide world, or actually a carbon dioxide reduction world. We've got a massive exposure to gas. And we've done that with a drilling option, which I'll demonstrate the value to all basin shareholders. As I mentioned, any one of these projects could actually add a multiple of our current share price. Right, re-rating opportunity one, obviously Serrano. Let's get into this quickly. So where is Serrano located? I'm conscious that we are dealing with international guests to this auditorium. So Serrano is close to the Ely Island oil hub. You'll see Serrano is one particular block. It's called R3, and it's close proximity to a number of locations, but in a mature address. Previously, it was mapped at about 1 million barrels. Hardly significant, heavy oil, but in 16 metres of water. Now, we picked it up for about 30 cents a barrel, and we moved to 100% this year. And as you see, we've done a remapping of the location, and the P50, which is the main in-place oil, has increased from about 4 million barrels to a significant 10 million barrels. Now, our currently booked contingent resource figure is estimated at 1.5 million barrels. This is not economic today. In fact, this is the basis of our renewal for another 5 years. But moving forward, I would bring to your attention that the field actually, as you'll see in the next couple of slides, has an extension from the location R5 to the north, where there's a nearby field that actually comes into our property. And to explain that in a little bit more detail, I'll just show you a couple of slides. First of all, here is the current view of Serrano. You see Serrano is a number of potential discoveries in what is called R3, yet to be awarded R1. You'll notice that it's close to Ely Island, and it's close to an undeveloped oil field called Taunton, which is Apache's next project in the area. It's also close on trend to a number of nearby undeveloped gas fields. To the north, there is an extension called Nasudis in from R3 into our block. Here is our current view. Current view from the previous work indicates that our field is about 10 million barrels in the ground, and there's potential in that field to produce a lot more than 1.5 million barrels. So the next view you'll see here is essentially, based on what we currently know, that production curve is uneconomic. Even the best case will be uneconomic, because we've only got 1 million barrels, 1.5 million barrels, that we're developing for $130 a barrel, so $130 million. So on that basis, it's about $90 a barrel to develop. If we change the development scenario to actually look at new technologies, hopefully we'll change this figure in the R3 context to about 2.5 million barrels, and we should get another 2.5 million barrels from the remapping of the field extension from the north. So for $130 million, roughly the same cost, the development cost will be about $30 a barrel. That is economic. If we manage to obtain 4 to 5 million barrels, our acquisition cost is 10 cents a barrel. This is how you make money in a $90 world. Second re-rating opportunity is the new information that's been released today on the Back Reef area. Now, this is a mature basin. The Canning Basin has had over 450 wells drilled, with some dubious success in the past. Only 6 discoveries out of 450 wells. In fact, back in the 80s, there were about 20 IPOs on the Canning Basin, all based around a location called Blina, which is nearby to the Back Reef area. This map shows 2 permits which are related to all basins. First of all is the Back Reef area, which is shown here, and then there's what I call the Derby block, this larger 5,000 square kilometre location, which we have rights to 50%. The Back Reef 1 well was drilled in October last year, and it's shown here. And here's the old view of what we were trying to look at. As you can see, there's the shape of the Back Reef area. There's the location of Back Reef 1. If you look to the right, this is a Google Earth picture, and it shows a couple of things. First of all, the location of our successful well last year. Also the location of the Blind oil field, some about 8 kilometres to the west. And you can also see that really, if you look at the slide montage here, there's been no wells drilled in this area till we came along in about 25 years. And there's a reason for it. We drilled in a syncline. And what did we find? Well, we found 223 metres of continuous oil fluorescence, continuous oil shows, of which the top 39 metres, shown here in red for dolomite, is oil bearing. And it's sealed by a section of limestone above it. Now, this is an unusual play, and you don't expect to see this in a syncline. So we're pretty pleased with that, but of course the problem there is that we had to explain what actually we found. And to explain how we drill this, we actually used quite a bit of modern science to actually look at an old tarred address with a previous probability of success of about 3%. In fact, being regarded as a graveyard in the industry for many years. So here's the technique that we used. Back Reef is located here on this one line, which we processed, and we used, essentially this line was shot with dynamite in 1993, and we reprocessed that 2D signal, we digitised it, and we converted it into modern techniques. I won't explain what, but basically we looked at it as if it was marine quality seismic. And when we drilled the well, the horizons came in within 3 metres of prognosis. So that gave us the confidence after we made the oil show to actually then reprocess 16 other lines in the area, which happily we completed that task in June, late June this year. So today we have a new view of the area, and this has just been presented today for the first time. There's a lot of data here. I'll just go for the main points. What we basically have found is, here's the Back Reef location. You can see there's Blina, which is over here, about 8 kilometres due west on that line. And we have this green trapezoidal sort of shaped area, mostly within our area. And that appears to be an oil fairway, and it's essentially a stratigraphic trap. We have a couple of conventional pools, which are also quite exciting. But you've got to remember, what was the biggest field discovered in the Canning Basin in 450 wells? Well, actually it was Blina, and Blina only has produced 1 million barrels since over 30 years. So we don't have a big target to actually push to actually beat the envelope, but we're pretty confident that we will test this well, Back Reef, this year. It's been suspended, ready for testing, and on success of getting fluids to the surface and getting oil, especially to the surface, we can delineate a whole new play, which happily all basins owns 100% beneficial rights for being the first mover on the scene. Here's a cross-section of, there's the same play, which is shown on the previous slide, and here's a cross-section showing essentially the play. As you can see, it basically rises to the east, but unfortunately it's defined by a channel. So the risk in this is that the channel may be breached. Now, we found 39 metres of pay at Back Reef, and that, to the 800 metre contour at least, becomes essentially 140 metres of pay if we go to the east. So imagine this is a wedge which basically drives north, and the area, cross-sectional area, is about 50 square kilometres. It's almost like an offshore type size prospect. Of course, it's cheaper to drill wells than it is to shoot seismic, and that's probably going to be the intention going forward. So the plan basically going forward is to look at this multi-million barrel type target. It's a stratigraphic feature. There is risk in it. In addition, we have a number of conventional 1 million barrel type sizes. 1 million barrel type sizes today are about $30 million in the ground. So already that's a multiple of our value. If the production test is significantly successful, we get oil to the surface, we declare a location, and we move forward. But as a potential company maker, we're pretty pleased with this result. It's a challenging result, but I think we've got the skills to move forward. Our next location is what I call the Derby block, and I'll just mention the recent USG potential which just came through from recent transactions with New Standard and ConocoPhillips. Previously, last year, before it was awarded, we analysed this block for CSG potential. In brief, the CSG, the best coal, is defined between these two fault lines. So to the south of that fault line, the coal ash content is about 45%, which is uncommercial for CSG and even coal mining. This is an area where Ray Resources are spending a lot of activity at the moment, around Paradise. To the north, there's a fault, and this area was, when it was the South Pole, was hit by glacier activity, and it wiped off about the top 300 metres of overburden, including all the coal to the north. So we don't go there. So as you can see in this area here, marked in green, it's marked in green because it's defined as being that area, or that section of the permit, which is at least 300, the coal is at least buried 300 metres deep and has 3 metres of thickness of coal. Now, it's 3 metres thick to the east, but it's 20 metres thick under Derby. So this is quite prospective. The coal looks like this, and the best estimate we came up with was about 80 billion tonnes of coal. So from a CSG point of view, rattling forward, we have potential defined growths, about 7 TCF of gas from coal. So that's risk potential 2P resources. And it's coal that's very similar to Surat Basin coal. And that alone, you would argue, would de-risk 450 dry holes in the Canning Basin. The USG potential has basically come up because nearby, 120, 180 kilometres to the south, a company called New Standard Energy, who are friends of ours, they basically have done a good deal with ConocoPhillips and have managed to farm out a large percentage, 75% of their interest. But just to illuminate where we're located, you can see there's Derby. Here's a contour showing the mapping that we did for the top of the first shell member. The thing you need to understand that we have 6 shell members, and each one of these figures I'll demonstrate is almost the potential in each of the shell thicknesses. Now, the other point to realise is that when you're looking at shale and gas from unconventional shale gas, people get quite excited about total organic content. And total organic content in the Eagle Ford Shale, for instance, in America is about 5%. A couple of these shales that we have, especially between Derby and Point Torment, are 9.5%, 10%. So these are fairly unusual shales. In context, what does that actually mean? Gross numbers are a bit of a giggle, 264 trillion cubic feet of gas in place for each of the 6 shale packs we've roughly got. So the numbers get quite large, and our net share is potentially 137. And just to put this also into context, just so you see where we're located, especially for the international participants, James Price Point is a location about 60 kilometres north of Broome. It is the designated terminal for all future LNG to be exported either from offshore gas and more recently potential for onshore gas. The area that New Standard have farmed out, and the farm out values their permit or their remaining work program at about $1 million a point. So it's quite a large farm out. Now you notice that we're actually just due north, and here's our permit again. And here's the comparison, which you can see at your leisure, between New Standard's shale gas play and our shale gas plays. You can see we've got a number of shales. Their expert came up between 40 to 480 trillion cubic feet of gas in place. So even 1%, 1 to 10% of that's quite significant. Our numbers are comparable, between 106 and 527. Now, we would argue that our address is better because we're close to infrastructure. So we have main roads, we have airports, we have ports, we have accommodation. And if you worked in the canning, they are luxuries because you can get stuck. So certainly we don't have to build for $10 million a road in the desert to somewhere to do a shale gas play. We can basically go within 5 to 10 kilometres of all our main roads and all the best bits. It's very important. Last thing I want to cover, and I know I'm between you and a meal and drinks, is Eastern Gippsland Gas. This is the name denominated by Bass Strait Oil Company, our operator on these blocks. Now, I'm going to give you guys a bit of an education in Gippsland very quickly, hope to make it interesting. Gippsland is my happy hunting ground, and I've drilled in my time about 30 wells there. Okay, we have Kipper. Kipper is a development, part of Kipper-Turum Tuna, a massive development by ExxonMobil, BHP, Billiton Petroleum. That cost is now overriding to about $2.4 billion. We have Long Tom, Nexus's project to the west. We have the Bascamanta Gami project, which was always a gas field, which had gas breakthrough. So that's been basically suspended, just immediately to the west of our permit, 41. 41, we've defined a number of plays, which I'll briefly go through quickly. We also have Sol, a gas field to the north, 100% owned by Santos. And we have Patricia Berlin, also owned by Santos. So we're in a good address. All these fields here, the 23 fields developed by ExxonMobil, BHP, Billiton Petroleum. They've had the biggest billion-barrel fields ever discovered in Australia, and also the biggest gas fields, also up until Goodwin and Rankin. Now, we're in a very gassy block. We have 12.5% rights. This is a drilling option, 1980 style. In the former life in Weeks Petroleum, we used to write drilling options. They haven't heard of them these days, but we evoked them again. This gives you a footprint on a permit, but without paying a major cost of entry. And hopefully over time becomes valuable. So we farmed in before the seismic was shot and processed. And the seismic, as you'll see, well, you'll see later, has actually delineated 6 drill-ready targets. Recently, Exxon also drilled in what's called a Golden Beach play, and they made an oil discovery. This is the second discovery ever found in the Golden Beach, third, after Golden Beach gas field over here, after Kipper, that's the third one. The play that we have 2 adjoining permits in controls 100% of the extension to the east. There is method in the madness, although it's taken about 4 years to get to this point. Why it becomes important is, as our previous speaker has mentioned, all the brown coal polluters are on the coast, around about here in Latrobe Valley. There isn't too much gas available for contract on the east coast, contrary to what you think. And we have potentially about 5 trillion cubic feet gross in these permits. Also, the operator last week signed a joint study agreement with CNOOC, part of CNPC, the 5th largest oil company in the world. So it's getting attention finally, and hopefully we can participate in that upside for shareholders. In summary, on the work that's been done to date, we have 6 drill-ready targets. We have somewhere between 3 trillion cubic feet of conventional gas and 700 million barrels, mainly of condensate and gas liquids, that's been delineated with pretty reasonable probability of successes, all with the latest inversion, AVO, 3D technology known to man. Now, our little entry into this in 2006, everyone said we were crazy it was a free-for-one promote. With time and with other costs going up, with exploration wells now costing 40 million per well, our promote is less than 1.5 to 1. Now, we actually have 12.5% of it. If you do the mathematics, if we farm out on a 2-for-1, we could keep 5%, get funded for free, and sell 7.5%. That has to add value to our shareholders. So in summary, why invest in us? We transformed ourselves from a low-cost investor to a low-cost operator. We expect to be rewarded retention lease free on the Serrano field, and we hope to work towards a unitisation with our neighbours. New work on that field and the extension will upgrade those resources, we think. Back Reef 1, the new oil play, has, assuming we have production testing success, may also lead to be a company maker because we have a major fairway of oil projects, oil testing and drill targets of that location. The nearby permit 507 ADP, which is the Derby block, we're in final stages of native title mediation, and we hope to be on title sometime this year. This permit is extremely well attractive for large gas potential and close to the proposed James Price Point LNG terminal. And that in itself, the fact that we've got CSG should de-risk guys exploring for much deeper USG. And finally, in East Gippsland, we have the first move advantage of CNOC, and I think you'll find that will become very important as a play for carbon dioxide reduction in Gippsland. And hopefully everyone here can make some money by investing in us. That's all I'd say.
Great, well done, Nick. Thanks, mate.